What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It's January 5th, 2022. It's actually my birthday today, which is pretty cool. And what a crazy day to trade on your birthday. So today we're going to talk about the price action, the indices. We're going to go under the hood and check out our sectors and style factors. And we're going to talk about why the world is ending. No, I'm kidding. All right, let's jump right in here and we'll dive in. I have a nice birthday dinner coming up. I love the Brazilian steakhouses. That's like my favorite thing. And my girlfriend's actually going to take me to one after this. Well, let's dive into the markets. So let's check it out. Hope everyone had a great trading day today. Today was definitely, it's day 3 of this new year, and we're already seeing obstacles being thrown at us, which is perfectly fine. If you have a good trading plan, you have a good process, these days, they're pretty normal, and it's all just about how you execute. Today, I'm actually very happy with how I executed. So we have the S&P 500 down 1.92%, pretty big down day for the S&P. The NASDAQ QQQ down 3.07% in one single day, pretty remarkable. Small caps were down 3.39%. Dow Jones was down 1.03%, and the ARK Innovation ETF was down 7.09%. This is a massive move, everyone. And volatility really exploded. And what was odd is, we were talking about this in our community, hey, volatility really wasn't that elevated until we got, later and later during the day. You can see volatility really blew out up 16%, 16.4, 14, 9, and breadth was horrible. The breadth throughout the first half of the session was actually pretty good, and then it really just started to deteriorate towards the end of the day. And you can see we had worse breadth in ARK, 0% advancers. Small caps really had barely any advancers either, just horrible breadth across the board. Dow Jones had the best breadth with 42% advancers. Heat map, oh my god, look at this heat map. So we had Microsoft down big, Google down 4.59%, Nvidia down almost 6 percentage points, Tesla down 5.35%, and remember, we had a pretty big breakout in Tesla the other day. So I actually am curious. I want to pull up that Tesla chart. I noticed there were a lot of false breakouts that really just manifested today. And then you can see, very few and far between areas of the market that actually remained buoyant. So yeah, it was just a massive slaughter across the board. As long as you're managing your risk, it's okay. If your portfolio is red today, that's perfectly fine. My portfolio was red today, but it was a nice manageable loss. The funniest thing though is the people that, they're like, I killed it today. Unless you're really in tune with the short side, maybe you're a day trader, you come into everyday flat, maybe you did pretty well. But if you're an investor or a swing trader, it's okay if today wasn't your best day. That's perfectly fine. Remember, it's day 3 of this year. Sectors. Take a look here. This is actually our countries. Let's pull up our sectors. My apologies. That is completely my bad. But you can actually take a look at those countries while I pull up our sector sheet. Let me see. Might have to edit that out of this video, but to be honest, for today, I might not. So you might actually be hearing this. But yeah, so let's actually look at these. Countries are pretty awful. I was actually trading Alibaba. I had to take my position off in that. And basically, so while this is loading up, I'll talk to you. I use a trend model, and throughout the day, my trend model, we came in at a +3, then it flipped to a +1. And when it flipped to +1, I was like, all right, I got to take off some positions. Then when it flipped to -1, then it was like, all right, now I really got to strip down. Then luckily I was pretty much out of everything by the time we flipped to a -3 into the close. Okay, so here is our sectors. I'm just grabbing this. Thanks for bearing with me there, because this is just, we got to check this out. Yeah, so take a look. So we had, in terms of sectors, energy has moved into our top momentum slot. Energy stocks we're only down 0.02%, so that's very noteworthy, the relative strength we're seeing in that area of the market. Regional banks are now a top momentum sector, and the global autos. But look at this. Nothing was spared, not a single sector. So this sell-off was very real. It's not like, oh, just a rotation anymore. Actually, a big sell-off. Blockchain assets were down over 5%. All these ARK funds were down. So this is huge. We are seeing things drop like 6% in a day. That is absolutely no joke, because that can really impact your portfolio in a single day. Let's take a look and see if I put these style factors in right. Okay, yeah, style factors. Take a look. None of those were spared either. We had high beta down almost 3%. Momentum stocks down 3.35%. So yeah, pretty much a bloodbath across the board. And the cherry on top is, take a look at the seasonality. So we're pretty much, right in the beginning of January, we had, I guess, that little seasonal run up in a lot of different stocks. It didn't necessarily happen in the headline indices other than the Dow Jones. But take a look. I mean, this seasonality in the beginning of the year is no joke. Between January and March, it can be very choppy, a lot of volatility. There can be drawdowns in there. So that's why I really think, like, you can't take the mentality in your trading of like, what's my P&L this hour? What does it look? How'd you do today? Like, what was your result today? Like, it's really, you have to think about it, because I'm pretty much going into the first couple months with the expectation of like, I might have to play defense these first couple months, and the first couple months really might not be good in the market. Like, it might be a big drawdown. Like, as a professional of this, like if you're a professional investor, trader, or even if you're just like, it's something you want to get better at, you just can't think in terms of days. Like, that's just, it's really dumb. Like, it's just not really the way to do it. So yeah, there's plenty of other things. Like if you play like video games or something, you could be like, how did I do this game? But you really have to play, the long game with trading and investing. Like, I just think it's super, super important. So we might be sitting in a more defensive posture for a while. This could end up being just not a good year overall for the market. You don't want to blow yourself up because you're trying to just, make it big every single day. So I really cannot stress that enough. So let's take a look. Really what catalyzed the sell-off today was the Fed minutes. So let's pull that up. Maybe it didn't even catalyze it. A lot of times it just serves as a trigger. But yeah, there were some strange things in the minutes. Not strange, but just pretty hawkish. So minutes from the Fed's FOMC meeting showed participants judged that balance sheet runoff could start sooner after the policy rate liftoff than last time. So basically we're speeding, essentially what that line is, they're speeding up the timeline, for the balance sheet runoff. And if you're a member of our trading group, every week I go through, I call it the one chart to rule them all, and it's the size of the Fed's balance sheet. That's really what has been advancing the market this entire bull run. So that's pretty huge. Significant balance sheet shrinkage could be appropriate. Normalization process. They were concerned vulnerabilities in the treasuries could impact the pace of the balance sheet normalization. Yeah, it says some participants already viewed labor market conditions as largely consistent with maximum employment. So you could go down the rabbit hole and like, what does this all mean? And like, let me try to predict the future and whatever. But for me, I just like looking at, the market trend. So let's take a look at those indices. And let's check it out here. So we have the S&P 500, you can see my trend model here flip to a -3. And take a look at this. So we got a 1.49 ATR move to the downside. That's pretty big. And in one fell swoop, we sliced through the 5-day EMA, 10-day EMA, and the 20-day simple moving average. And now we're inside of this monthly value area. So if we don't jump back out tomorrow, we're going to trigger a bearish 80% rule, which means, we could conceivably touch down to this 45.57 level. So yeah, you could be like, what's going to happen in the world 2 years from now or whatever. I love thinking about those things too, because, I used to be really into global macro, and I still kind of am. what I've noticed in terms of like price action trading is you don't really need to be like hyper focused on it. You really just need to be hyper focused on the price action. So like, you know, somebody would say, you know, was that FOMC or those minutes good or bad for the market? You know, you could just look at the price action. Oh yeah, the price action shows, you know, market participants were not thrilled by what they heard. But yeah, it's just very important. You know, the market could just go into a tailspin here. We really don't know. That's the other thing. Like, we're not trying to predict the market. We're looking for the path of least resistance. And at this point in time, it looks like the path of least resistance is to the downside. So it's all about just playing the probabilities. And once you enter the monthly value area from above, then the probability becomes that we could revisit this point of control. We could revisit that value area low. And then from there, it's like, okay, now we're looking at these lows. Do we take those out? So yeah, just always important, you know, keep the trend in mind. Always think in probabilities. We're not trying to, you know, predict anything. And then take a look. This is the hourly chart. So this was interesting. So we hit this S1 pivot down here. And I thought perhaps the market, you know, a lot of times the market does just kind of stay there, ends up bouncing there. But yeah, we got some nice follow through on this selling and another really big red candle. So let's take a look. That was the S&P 500. Whoo, and that one's actually not the index that looks bad. The NASDAQ, jeez. So the NASDAQ undercut these key moving averages, and it's already moved completely through value. So yeah, we're sitting pretty much right on support, and suddenly here we are. You know, we made a low in early December, you know, December 3rd, December 6th. Then we actually undercut that low on December 20th, and here we are now. We're revisiting it. So is it possible that we end up undercutting this low and we go all the way down to perhaps where we were in October over here? Yeah, it's definitely possible. So yeah, the basic idea is like, get to safety. You know, don't be a hero. Don't try to pick that bottom, and you know, you'll live to fight another day. That's the most important thing. Like, if the market right now, like, this market just sucks. Like, the most important thing is when the market like sucks, you have to just live to fight another day in it. So the Russell 2000 down 3.41%, and we're seeing a similar thing. The Russell just already looked like garbage. So yeah, more of the same. And the Dow Jones is like the shining star here. The dogs of the Dow. You can see they, you know, also had a bearish candle, but the Dow largely, it looks pretty intact. We're still above value. We still look pretty decent on the Dow. And then the big story, so this is also what made me like, all right, I gotta respect the risk here. Treasuries really broke down, and in the morning they were pretty much flat. They looked okay. Yeah, that was the other thing. We got the ADP employment report earlier this morning, and it came out as a huge beat. So that also just kind of like rocked the boat. But yeah, look at this. The 10-year Treasury futures, they undercut this low made on November 26th, and they held that low. And last time, what was it that pushed us off this low? It was the news of another COVID variant. And sure enough, yesterday I'm starting to see like the IHU variant. So it just seems like in order to keep this financial system in place, they need to just keep pumping these variants. No, I have no idea. It's pretty weird though, but yeah, that's like a weird conspiracy talk. I don't want to, you know, get into that. Well, let's see. So yeah, so this is a breakdown. And really, with yields moving higher, that just becomes a tough environment for growth stocks, for you know, really for all financial assets. So yeah, we'll have to see if these 10-year treasuries can recover at all. Let's look at some of these charts. So we had Tesla. This was one that I wanted to look at. It's not like the chart's completely broken or anything. Oh wait, this is the weekly. Let's look at the daily. Oh yeah, so that pretty much broke. So we had this big breakout on volume. Now we've completely retraced that. So that's the other thing too. Like in 2020, with what the market did, there's so many new people in the market, and for a while, like, they didn't have to really like progress in their trading tactics or skills. Now, if you want to survive, if you're like one of those traders that was born in the 2020 bull market, you have to start using stop losses. You know, it's a very real thing, because now in this market, now that the trend isn't really just like a raging up anymore, if you don't stop out of something, it can really haunt you in the future. So Tesla was down 5.35% today, pulled into value. Not really the best. Another name that I was watching pretty closely is MP, and I actually missed this move. I really wanted to get this, and it was like, man, I missed day one, so now it's like I don't want to get into it. And then on day two, it was like, geez, I still could have gotten into it. So I was like, you know what, I missed it, I'm not going to worry about it. And this one just completely reversed. So this is the market environment that we're in, where things will break out and then they'll just come back in. Ford was one of the only things I was able to keep in my portfolio today. It did come in, and maybe it will end up tagging this 5-day EMA or really pulling back even more tomorrow, who knows. But overall, it still looks okay. See, it's still in Ford. And then this ARK ETF, where we dive into my trade. So the ARK ETF, it broke through support. I actually had a trade on in the ARK ETF. I had some calls on just in case the January effect really kicked in. And I closed those out today when ARK was down maybe like 2.2%. So I saw that it was starting to break this line, and I was like, all right, I'm cutting this, you know, no big deal. But yeah, this pretty big breakdown for ARK. And on the weekly chart, pretty big here. We've been consolidating for 1, 2, 3, 4, and this is the 5th week, and we're getting the breakdown. So who knows how low these will go? I don't think anyone really knows. But right now it seems like we're getting into like the panic part of the selling. All right, let's take a look. We'll pull up my trades for today. And like I said, my goal was really just get to safety. So yeah, I'm really proud of how I traded today. So we're not going to be able to go through all of these because I basically went to safety, went to cash. I had a Microsoft call, ended up closing that out for a loser. What else here? I tried Apple for a bounce, and then when I saw that the treasuries were weak, I closed it out for a very tiny winner, literally like a 10-cent winner. Closed out, like I said earlier, I had an ARK trade on that I closed. Thought we would get the January effect. It just did not happen. And it ended up closing out the rest of my Alibaba. This was my big winner for today, and this actually really stabilized my portfolio. Alibaba was very strong in the beginning of the session. It was up maybe like 4 or 5%. And I closed these Alibaba calls out for, almost a triple. So yeah, I was able to make, and this is the thing with trading, so this ARK trade, I was completely wrong. I thought there might be a January effect. Lost 50% on it. Lost on this Microsoft, but this Alibaba, getting almost a triple, really just helped me out. I ended up selling some DigitalOcean puts. That's another thing. I think premium selling could work very well in 2022. This name I really like fundamentally. And I was like, you know what? If I can collect all this premium, now everyone's freaking out over these growth stocks, I'm going to go for it. And DigitalOcean ended up closing not even on the lows of the day, which is pretty good. So yeah, DigitalOcean more of a fundamental play. And it's more of a play on the implied volatility. I'm saying, hey, this stock, it might even go down, but I don't think it's going to go down that much by January. And then if it does, hey, I'll buy some of those common shares. So yeah, put that on. XLF, I had a nice trade in this one, made 40% and change. And at 154, I closed it out. And that was because my trend model was flipping. So yeah, closed it out for a nice winner. I said, would have liked to let this run, but my trend model is flipping negative. So going to pull it in for prudence. And XLF, I believe it ended up closing negative. Yeah, so when I closed it out, we were still positive. And then when the market really just rolled over, then it flipped to the downside. And then I tried, towards the end of the session. At this point, I was already in like 70% cash or like 60% cash. I put this on as like a little lotto just in case we do get a bounce. I'll have some way to participate. I got long some Apple January 175 calls. Then for stock trades, basically did the same thing. I won't go through all of these, but I tried some new names because coming into today I was in 35% cash. So I tried some new names Deer, Alibaba, I flipped out my options into common stock, NEM, and I ended up stopping out of pretty much all those new exposures. Stopped out of all of them. I had this TSM, which had a small winner in, came back in, closed it for a very tiny winner, basically a scratch. So yeah, I just took stops on a bunch of trades, took things off, and yeah, got to safety throughout the session. So now, you know, I think I'm in a pretty good spot because it's like, hey, you know, today was it like, you know, did I make a bunch of money? No, my portfolio was actually red for the day, but I did not lose 2%. I did not lose 3.07%. I did better than these indices. So I'm really happy and proud about that, because if the market goes into a tailspin, which is possible, now it's like, okay, had that day and now I move on to the next day. So it's super important, you know, always have your process, and I'm glad, you know, my process really helped me today to just get out of the way of this crazy market. So let's take a quick look at our options order flow. I want to make this video like a 2-hour video. Let's see. Yeah, and really appreciate everyone that you know, tunes into these videos. It's awesome to have you. Okay, so first thing that I notice is, so this is the intraday put to call ratio. We got all the way up to a 1, so that is good. But just because you have one day with an elevated put to call ratio, that doesn't necessarily mean like you're in the clear. So let's go to VigTech. Oh yeah, and another thing that I want to bring up. When my trend model flips to a -3, when the market just has this huge volatility spike, there's always that initial draw of like the market's going to have some sort of violent bounce. It's always like, man, I need to get long everything again. But typically when the market has a really bad candle like this, typically it's not just like one and done. Typically, you know, the market can really do this for a while. And you'll notice like back here, you know, it might have seemed like we had this huge sell-off. Okay, it's all over, we're all good. And then boom, we're just right back down. We make new lows. Same thing, you know, over here. We had the sell-off. Oh my gosh, we're back to the highs, and then boom. So yeah, it's all about, at this point, given where we are, you really, you know, I know everyone says like be patient, but yeah, you really have to, you know, be careful on what you're biting on. Make sure the edge is there. Okay. Let's take a look at VigTech. I'm going to go to our options races. Let's look at today's combined flows. And what do we have? Tesla, Oracle, SPY, AXP, some financials. BMY, I didn't really look at this one. I saw this come up. Okay, so we had just over 3.6 billion for Tesla. Yeah, and our typical suspects, we had Nvidia. Let's take a look at this BMY. Is this Bristol Myers or what is this? Yeah, okay, so this is a healthcare drug manufacturer, so more like a defensive play. Other than that, pretty much what we usually see. So let's pull up our trade scheme. Tesla, mostly calls going up into that weakness. This is another sign. A lot of times when the market bottoms, you'll see puts in everything. I'm telling you. And that's usually when it's like, all right, the market just bottomed. Like everyone bought puts on all this stuff. Oracle, some flow. This is for January 21st. 70 strike, 65. I believe Oracle's trading much higher than that. Yeah, it's at 86. They're buying it on the trip back to the key moving averages. Facebook, Intel, TQQQ. Yes, this is the triple leverage Qs. We got some puts going up there. Although I did notice even early on, there were just so many SPX puts going up. So yeah, 4,300 strike, 45.75. Ooh, 35.25. Geez. So yeah, a lot of puts going up for the indices. And then Nvidia. This has been like the poster child of the last bull market. Yeah, and it looks like people are starting to buy puts on Nvidia. February 280s, January 320s, January 300s. Some of these are very short term. Let's look at Nvidia. Yeah, in Nvidia, this thing looks like it's kind of breaking down. So yeah, not really the best chart. And to be honest, like, this thing really looks like it's been under distribution for a while. Like, look at all of these big red candles. They just don't look good. That's a key sign. Like, when something is basing and you're seeing just like a ton of red candles in there on high volume, it's always a sign for pause for sure. But yeah, Nvidia, not looking so great. Had an incredible run in 2021, so this is a great stock. But rarely, if ever, do you see, you know, the big winner from 2021 ends up killing it in 2022. Now there's probably a lot of people that go, okay, I had a year for my taxes, now it's a long-term capital gain. Let me go ahead and sell me some Nvidia. So yeah, overall, you know, very red day in the markets, but that doesn't mean, you know, these red days, and this is what I'll leave you with. You shouldn't feel like on a green day you're like, yes, I'm on top of the world, like I'm so good at trading. And then on the red day you're like, oh my god, like I suck, the world is coming to an end. It should just be, this is part of the business. Like if you take some stop losses, those are quite literally business expenses. That's all it really is in your trading business. So yeah, you should feel, you know, the same way today that you do on any other day. But yeah, it is pretty exciting though when the volatility picks up this much, because typically when it does, on the other side of it, there's some great opportunities. So yeah, definitely want to keep watching for those great opportunities. In this -3 market, I'm going to be switching more to playing defense. If I am going to trade on the long side, I want to make sure that I'm doing it in a day trading capacity, not like trying to swing for the fence, trying to hit like crazy upside targets. Like yeah, in this -3, I'm going to get my day trader hat on. So that should be pretty fun. I like flexing that skill. So with that being said, I hope you all have an awesome rest of your evening. Oh yeah, by the way, I'm going to be running a Twitter space tomorrow. It is going to be all about data-driven investing. I got an amazing panel. 3 people that I really, really respect, and I selfishly wanted to put this space together really just to learn from them and pick their brains. I think it's going to be a great event. So that's tomorrow, Thursday at 7 p.m. So feel free to go ahead and check that out. That being said, everyone have a great night. I'll see you all tomorrow.